Good evening, friends. Good evening, friends. This is Prakash Sinha, Chartered Accountant and an advocate in High Court of Delhi. And as per our regular practice, this time we are discussing the case law which are reported in the ITR number 455, part 4. While we will go through various judgment of this case, this ITR, we will try to cover some other judgment also which has been reported also, which has been reported, but in some other ITR. So let's go with the judgments which are reported in the ITR number 455, and this is the 455, page number 562. This is from the Allahabad High Court. This is from the Allahabad High Court, and this issue is about the offense and prosecution. The case of the SSC was, the SSC has not filed. Can you go to the 562, 455, 562? The SSC has not filed the return under 139(1), and subsequently it has filed the return belatedly under 139(4), and 139(4), when the return was filed, SSC also paid the tax as well as the interest. Once the SSC has filed the return, the notice came from the department, and this notice was an offense under 276(c). We all know that what is about the 276(c). 276(c) is for the failure of offense, for the failure of the filing of the ITR. So if we go to the 276(c), talks about failure to furnish return of income. I'm just reading this one. If a person willfully fails to furnish in due time, the return of fringe benefit which is required to furnish under subsection 1 or subsection 115 WD, or by notice under subsection 2 of the said section, or the section 150 WH, or the return of income which is required to furnish under section 1 of section 139, or by notice given under clause 1 of section of 142, or section 148, or section 153A, he shall be punishable. What he shall be punishable? In case where the amount of tax which would have been evaded, if the failure had not been discovered, exceeds 2,500,000. This means 2,500,000, 25 lakhs rupees, with a rigorous imprisonment for a term which shall not be less than 6 months, for which, but which may be extended for 7 years. In any other case, with imprisonment for a term which shall not be less than 3 months, but which may extend to the 2 years, and with fine, provided the person shall not be proceeded against the order against under this section for failure to furnish in due time the return of fringe benefit under section 115 WD, or the return of income under section 139(1) for any assessment year for any assessment year commencing prior to 1st day of April 1975, for any assessment year commencing on or after 1st day of April 1975, if the return is furnished by him before the expiry of the assessment year, or a return is furnished by him under subsection 8A of the section 139 within the time provided in subsection 4, or the tax payable by such person not being the company, or the total income determined on regular assessment as reduced by the advance tax or the self-assessment tax, if any, paid before the expiry of the assessment year, and any case deducted at the source does not exceed 10,000. So this section 276 has two limbs. 276C has two limbs. First, it talks about failure to file the ITR, and that failure is called the due date under section 139(1). We are not going into the other return, but we are going into the other 139(1). 139, if you have not filed the return under 139(1), so what will be the case here? In case where the amount of tax which would have been evaded if the failure has not been discovered, who is discovering the failure? It is the AO has to discover the failure, exceeds 25 lakhs rupees. Then what will happen? Then there will be rigorous imprisonment for a term which shall not be less than 6 months, but which may exceed to 7 years or with 5 years. However, there is a proviso clause also. The proviso clause is quada, where the person shall not be proceeded against this section for failure to furnish the due time, the return of fringe benefit, or the return of income under section 139(1). So the return of section 139(1) is covered, is protected through the proviso clause. What it says, for any assessment year commencing prior to this part here, and for any assessment year commencing on or after 1st day of April 1975. In our case, the assessment year is 15-16, so we are covered here. What if the return is furnished by him before the expiry of the assessment year, or the return is furnished by him under subsection 8A of 139 within the time provided in the subsection, or the tax payable by such person not being a company, or total income determined on regular assessment as reduced by the advance tax or self-assessment tax, if any, paid before the expiry of the assessment year, and any tax deducted or collected source does not exceed 10,000. Very much clear. The concept should be that under section 276, there are two limbs. First limb talks about the general offense. If the offense is under 139(1), if the offense is that SSC has not filed the return under 139(1), then the proceeding under 276C can be initiated. However, there is a proviso clause through which the non-filing of the return under 139(1) is protected in two sense here. It is not at all applicable in the case in the prior to 1st April 1975. However, after 1975, the clause is that there are two clauses there, alternative clause there. It talks about that if the return has been furnished within the assessment year, or within the period under the updated return, if it has been filed, then it can be updated return here, and subsequently there is the tax payable has been paid here. However, in this case here, the High Court has not touched that part here, the proviso clause here. High Court has simply said that you have failed to file the ITR. You are covered under the first limb of 276C, and therefore all the proceeding of the penalty offense should go on here. In fact, I didn't find any argument also where the SSC has raised the argument on the proviso clause here. This means the first proviso clause here. what the Allahabad High Court has said. Allahabad High Court has elaborated the first proviso, what is the due date, what is the return under 139, and it has not touched the aspect of the second proviso, saying that how a person can be out here. So the fact is that the SSC, as I mentioned, that can we come to the para number 3? Para number 3. Yeah. Learned counsel for the appellant submits before that, come to the para number 2. This is the read. This is the not a read. This is the petition under 482 of the CRPC. I will tell you what is the petition under the 482 of the CRPC. Here the High Court apply its residual power. This means all the powers through which it can cause any FIR, charge sheet, or any proceeding which is there which is pending before the lower authority, or which is any order which is pending here. So there is a 482 is there. Generally, we file the petition under 482, read with Article 226, because sometimes we seek direction, not only causing, but sometimes we seek direction to be issued to the lower authorities here. Similarly, the case is that the appellant under 482, the appellant has under section 482 of the CRPC has filed seeking quashing of the summon order. So what he is filing? Summon order dated January 16, 2018, and non-bailable warrant issued on December 10, 2019. Issued this one's here on non-bailable warrant issued on December 11, 2019 against the accused in complaint case number 28 of 2018 under section 276(c) of the Income Tax Union of India, Jaishankar Singh, pending in the Court of Learned Special Chief Judicial Magistrate, Varanasi. So what is there is a summon which has been challenged and the non-bailable warrant which has been issued that has been challenged here. And that has been filed through the 482. We are at the, this means this is the investigation stage. Its investigation has not been completed here. So the Learned Counsel, what is that? Come to the para number 3. Learned Counsel of the appellant submits that the appellant is the income tax SSC defined under section 2 subclause 7 of the ITR and has been regularly paying the income tax. He has been allotted the PAN number of his number of his karta, that is the HUF. He submitted that the applicant has filed the return of income belatedly on 31st March 2017 for the assessment year 2015-16. So the SSC has filed the return within the assessment year itself. However, the SSC has not taken the shelter of the proviso clause of the 276 proviso clause of the 276(c). I feel that there is something missed that part here, and declaring a total of income of 24 lakh rupees and had deposited its sum of 8,28,000 rupees as a self-assessment tax on the 31st March along with the interest payable under 234 APC. And after that, it has completed. After that, notice has been issued to him. It is submitted to the para number 4. Yeah, it is submitted that the DCIT Varanasi filed a complaint in its official capacity at the instance of the Principal Commissioner of Income Tax Varanasi of being authorized and granted section under section 279(1) of the Act on January 8, 2018. So 279 is sanctioned for the purpose of prosecution. It is mentioned that the sanction notice, sanction order that is so-called was sent to the appellant on November 30th, 2017, sent by speed post, asking the appellant to appear and file a reply. So the summon was issued to file the reply. There was nothing more in the summon here. File reply before 31st, but despite service of the super notice on 31st Christmas, and even thereafter, the appellant did not file any reply, nor attended the office of the authority, though according to the appellant, he never received the super notice. What the respondent has done, the appellant grievances is that since the appellant had filed the ITR, although belatedly on 31st March 2017, along with the penalty and interest, there being no mens rea on the part of the appellant, therefore, issuance of the so-called notice after the appellant had made compliance and had deposited the tax did not call for any action. It is submitted that it is not the case of failure to furnish the return of income so as to attack the action under 276 CC of the Income Tax Act, merely because the SSC has filed the return belatedly by 19 months. I'm not able to appreciate that how it is able to file, because the assessment year was 15, 16, and when the assessment year was 15, 16, assessment year was finished on 31st of this March 2016. The return was filed on March 2017, 31st March of 2017. So return was filed and the SSC has paid the tax. The issue is that whether it can be covered under the 276 CC. In my view, that if you go to the proviso clause of the 276 CC and particularly 276 CC, subclause Roman 2, clause B, it says that, let's see the clause A, the return is furnished by him before the expiry of the assessment year, or return is furnished by him under subsection 8A of section 139 within the time provided in that subsection. So you can either file the updated return, or you can file the return within the expiry of the assessment year. Assessment year expired on 31st March 2016. So therefore, this condition was met. Or the second condition is that tax payable by such person not being a company on the total income determined on the regular assessment. The tax payable by the person not being a company on the total amount determined on regular assessment as reduced by the advance tax or self-assessment tax, if any, paid before the expiry of the assessment year, and the tax deducted is collected at source and does not exceed rupees 10,000. Very much interesting what he talks about. The tax payable by such person not being company on the total income determined on regular assessment. So it talks about that there is a regular assessment. Even though SSC has not filed a return, there is a regular assessment as reduced by the advance tax or the self-assessment tax, if any, paid before the expiry of the assessment year, and the tax deducted or collected at source does not exceed 10,000 rupees. So the SSC, so no need to go into the second limb here. And the SSC has SSC has challenged the summon order and the non-bailable warrant through the section 482 of the CRPC, saying that since it has paid the taxes, therefore there is no case of mens rea that should be there. No notice was served here to him here. And after that, he has relied upon the various circulars, which is coming in the para number 7, which say that applicant has placed the reliance on circular number 24 of 2019. It has then, and after that, the applicant has also, petitioner has also relied upon the various judgment of the court here. The Reliance Supreme Court judgment, they have SC Narigal that the judgment has been quoted on. They come to the para number 10. And after this, various other judgment has also been quoted by the SSC, saying that since the tax has been paid, mainly the tax has been paid to the SSC or to the department, along with the interest and penalty, whatever may be there. Therefore, this case should not be covered under the 276(2)(c) here. And if for this purpose, it has relied upon the various judgment here. Then the issue is there, what the revenue is arguing. Come to the para number 20. Para number, what the revenue says. Learned Counsel for the Revenue Respondent Department, in his turn, places reliance on the judgment of Supreme Court in the case of J Fibers, when the Supreme Court has held the word henceforth used by the board must lead to the conclusion that only prospective effect thereto should be given and not retrospective effect. Drawing attention of the circular number 24 of 2019 and September 9, 2019 itself, it is submitted that the paragraph 5 of the circular, it is mentioned that the circular shall come into effect immediately and shall apply to all the pending cases here. All the pending cases here. They have also relied upon the Supreme Court judgment in the Mahakali ruling and other part also in the 276. Come to the paragraph number 23. Paragraph number 23, which is important here. How the paragraph number 23 is there? The court says that reliance is also placed on the judgment of the Supreme Court in the Prakash Nath Khanna, wherein it was held that one of the significant term used in the section 276C is that in due time. Due time is coming under the first link of that part here. If a person fails to furnish in due time, how to interpret the term in due time? The time within which the return has to be furnished as indicated only in subsection 1 of section 139 and not the section 139(4). That being so, even if a return is filed in terms of section 139(4), that would not dilute the infraction, if any, not furnish the return in due time as prescribed under subsection 1 of section 139. Otherwise, the use of the expression in due time would lose its relevance and cannot be said to be expression clause 1 of section 142 by the Direct Tax Amendment Act 1987 with effect from 1st of April 1989. The expression was used under subsection 2 of section 139 as at the relevant point of time. The assessing officer was empowered to issue the notice requiring furnishing of the return within the time indicated herein. This means that the return within the time in terms of section 139, as indicated in the notice given under section 2 of 39, there is no condonation of said infraction, even if the return is furnished under section 4. So even if the notice has been issued to you and the notice, and after that notice, the return has been filed. There is no condonation of the infraction because the infraction of 276 double C has already taken place here. This is the argument of the revenue. Come to the what the court says here. Come to the para number 25. What the para number 25? From the 25 onwards, the court hearing is there, and let's see how the various term under section 276 double C has been discussed here. After hearing learned counsel of the party and going through the material produced by them, certain facts need to be answered first, namely circular number 24 of 2019 dated September 9, 2019, 417 ITR has no retrospective application as is evident from the law laid down in the case of Jai Mahakali versus Union of India and the law laid down in the case of SRMB dairy farming will not be applicable looking into the language of the circular itself to be used in para 5 of the circular, especially providing that it shall be applicable only to the all pending case which the complaint is yet to be filed. Similarly, the law laid down in the case of Naregal versus CIT will not be applicable as its own fact, and these judgments are distinguishable. Similarly to the reliance is placed on the circular number 24 of 2018 in the state that the offense under 278 is providing that the case of this part that will also not apply there. Same is situation with regard to the judgment cited in the application in the case of Rupakali, which is not the judgment on the tax report, judgment regard to the other laws. The judgment in the case of the state of Orissa versus Muhammad Ilyas is not in relation to the interpretation of the provision of the Orissa Act. Now come to this part here, para number 30, which is the operating part here. The judgment given by the various high courts, various high court of Andhra Pradesh in the case of Autofills, the High Court of Madras in the case of the Narayan Union of India, and the High Court of Madras in the case of Rajkumar Tyagi Rajan, in their turn on their own fact. In fact, the High Court of Madras has not taken the consideration of the law laid down by the Supreme Court in the case of Prakash Nath Khanna. The judgment in the case of Suhas Suresh Solapur Math versus income tax is also distinguished. The judgment of Faroja projects is also distinguished here. Come to the para number 30, which is the important part, para number 30. Thus, when the fact of the present case are examined in the light of the law laid down by the Supreme Court in the Prakash Nath Khanna case here, it is evident that the use of the word in due time is significant term used in section 276 double C and relies on the non-furnishing of the return within the term of section 1 as indicated of the notice under 139. There is no provision in the condonation of said infraction. Very much important. The law says that once there is a infraction of the 276 double C, there is no infraction, there is no provision. Are we on the same page? Para number 33. You see that there is no provision for the condonation of the said infraction, even if the return is filed in terms of section 149(4), because the due date is prescribed under the subsection 1 and 2 date of section 139, not get diluted by filing the return under subsection 139(4), much later against the legislative intent here. So the law is saying that there is no clause under section 276 double C. We say that if the SSC has filed the ITR if the SSC has paid the taxes, then the default of the 276CC can be condonable. The contention of the appellant counsel that the return was filed prior to the issuance of a notice by the department is to be examined in terms of use of the word or on under subsection 1 and subsection 2 of 139. Word or is normally distinguishable and or is mutually conjunctive and has been held to be the Allahabad or Hyderabad Asbestos Cement Products versus Union of India, wherein it was held that or in its natural sense deny the alternative or has not acted as the substitute here. In the case of Nasruddin versus the State Transport, this one here has quoted that part. You do something, read or as and is the statute, but you should not do the unless you are obliged to do or does not generally means and or does not generally means the or here. So what the court is finding that the 276CC has to be given the strict interpretation. Once the strict interpretation is there, once the default by the SSC to file the ITR, and from the fact from the assessment record, it comes that SSC has not filed the ITR or the SSC has not deposited the tax. Therefore, the issue of the 276CC can trigger here. If it is triggered here, then what is the way out? The court has said that in our view, in our personal view, we will like to have adjustment, or we will like to see what can be done here. However, the court is of the view that since there is no provision for condonation of delay under section 276CC, therefore, the penalty which has been imposed or the offense which has been cited or the prosecution proceeding is quite valid, and therefore the SSC has lost the case or the SSC petition has been dismissed. Can we come to the next case law? Next case law is Chhattisgarh High Court 455 ITR 574. Can we come? Naman? Yeah, please.
Yes, I'm doing that. Please introduce the case. I'll be presenting it.
574. 455, 574.
Yes, sir. I'm opening it, sir. You can introduce the case by then. I'm presenting.
Okay. In this case, the SSC has filed a writ, and the court has said that court has relegated the matter, saying that the alternative remedy is available to you. Just hold on. This is the 574. Yes. The court has relegated the matter, saying that you have the alternative remedy which is available to you, and therefore the writ is not maintainable there. The fact of the case was that the appeal is presented the appeal is presented against the order dated 25th of April 2022, passed in the learned single judge in the writ petition number 124 of 2003, by having regard to the fact that alternate efficacious remedy under 246A and 240 this one is available to the petitioner against the assessment order dated March 30, 2005, issued under 147, read with 144B, and a demand notice under 144. So there was a assessment order which was passed on 30th March 2020 under section 144B, read with section 147, and a demand notice was issued. And both this assessment order and the demand notice, the writ was filed before the single member bench in the Chhattisgarh High Court here. What the Chhattisgarh High Court has said that the contention was advanced by the respondent that a draft assessment order that this one has been supplied to the dispenser. The main grievances of the SSC was that single had, without considering the reply of the petitioner dispenser, the assessment order has been passed even without supplying the draft assessment order dated March 2022, and therefore the same is passed in violation of principle of natural justice. So the main contention of the SSC is that the assessment order has been passed without issuing a draft assessment. The High Court of the view that this procedural gap or the natural justice, you can take up this matter before the High Court, before the CIT appeal. And what the single member judge has passed the order, a perusal of the order would show that the contention was advanced by the learned counsel of the respondent that the draft assessment order this one here has been supplied to the petitioner. So it is the dispute of the fact. What is the dispute of the fact? The SSC says that this document was not supplied to me. The respondent, the revenue, says that yes, this was supplied to you. Therefore, since it is a dispute related to fact, the court is reluctant in indulging in showing indulgence under Article 226. What should be there here? A perusal of the reply dated 24th March 2022, which was supposedly uploaded, does not indicate that any plea was taken, that the draft assessment order was not received by the SSC. However, we do not express on the final. So it is saying that you have not raised any objection, blah, blah, blah. And therefore, the single member bench is remanded the matter back to the, has relegated the matter back to the CIT appeal, seeing that this is a dispute of fact. The SSC is saying that he has not been served the draft assessment order. The department says that it has been served to the draft assessment order. So there is no denial that the draft order was not issued, but only denial was that it has not been served to the SSC. It has not been served to the SSC. So the para number 6 is important. It is submitted that Mr. Goel has that the request for personal hearing made through the reply dated March 24, 2000 was not considered, and apart from replying, the reply was also not considered purportedly on the plea that the failed to upload the PDF document, assuming that there was some problem, then also it was incumbent on the part of the respondent to have informed the petitioner about the same, so that the remedial steps could have been taken. So the High Court says that since it is a matter of dispute of fact, High Court has not shown the indulgence, saying that, and after that the High Court has relegated the matter or the uphold the order of the single member bench here. Another important case here, 455 ITR 576, Bombay High Court. Very interesting argument, very interesting fact is that it has been argued by Pardiwala. The fact was that the SSC has filed the return. The return has been processed under 143(1). However, subsequently, no notice under the case was not selected for the scrutiny, and therefore no 143(2) notice or the 143 proceeding has started. In between what happens here, since there was no 143 notice or the assessment has not been proceeded, assessment was completed under 143. The case was not selected for the scrutiny. However, the SSC has referred the file to the TPO to verify the international transaction. And the TPO has come to a conclusion that these certain amounts has to be adjusted. And therefore, based on the recommendation of the TPO, the AO is trying to increase the amount or trying to adjust this amount or trying to say that this much of the demand is should be there. Based on that part, that SSC can file the appeal here. The argument of the senior counsel is that the requirement of the section 144C has not been done, or the 92CA has not been done. And since the 92CA proceeding has not been complied, since there was no assessment which was pending, therefore, there was no question of reference made to the TPO. And in fact, TPO has said that the case was not selected for the scrutiny. Since the case was not selected for the scrutiny, that amount cannot be considered for the purpose of income escapement here. And this is the same thing is happening here. Come to the para number 2. The fact, I have already told that fact. What is the fact here? There was no 143(3) was pending. However, the assessing officer referred the file to the TPO, and the TPO had suggested that sum of rupees 12 crore rupees should be adjusted in the international transaction. And based on that TPO report, the AO has issued the 148 notice. Come to the para number 3. Para number 3, it is you are not showing the para number 3. Come to the down. Can you go to the down? Yes. Yes, para number 3. Just highlight this part. The return of income was processed under 143(1) of the ITR. The assessing officer made a reference to the section 92CA. What we know that reference to that 92CA, where there is international transaction having the TP adjustment. 92C of the Act to the TPO on October 26, 2009. The TPO passed the order under 92CA3 of the Act on October 29, 2010, making an adjustment on account of arm's length price of the international transactions of rupees 12.17 crore. The assessing officer recorded reason for reopening the assessment and issued notice under 148 of the Income Tax Act. The respondent, while it's dated July dated 28 January 2011, objected the said notice. It was the case of the respondent that the reason to believe that the income has escaped assessment was based on the invalid TPO, and hence that was no reason to reopen the assessment on the basis of the said order of the TPO. So based on the TPO order, you cannot make any adjustment or can you propose for the purpose of reassessment here. The reason why the respondent took this stand was because the respondent returned the income was processed under 143(1), and there was no assessment process pending under section 143(3), during which the reference could be made to the TPO under section 92CA of the Act, and the reference to the TPO shall be invalid. and passed by the, he said that since the no return was pending before the AO, so any reference or any reference made by the AO to the TPO was totally invalid. In fact, and this statement was also confessed by the AO, which he said that he does not have any authority, or he does not have any authority to verify this one step. And after that, there is a discussion on the scope of section 92CA. The scope of that, when and case can be transferred to the TP, and the minimum discussion is on the entire of the section 92. Come to the para number 8. Yes, para number 8 is very much relevant for us in order to understand the international tax assessment here. How to understand the entire scheme of the 92, particularly 92CA. The entire scheme of the mechanism to compute any income arising from the international transaction entered between the AE and the contained in the section 90-90F of the Act. 92CA, which is the relevant section for our discussion. 92CA of the Act provide that where the assessing officer considered it necessary or expedient, so do he may refer the computation of the arm's length price in relation to an international transaction to a TPO. In such a situation, the TPO, after taking the in writing under section 92CA of the Act, determining the arm's length pricings in relation to the international transactions. On receipt of the order under 92C4A, the Act requires that the assessing officer to compute the total income of the assessee in conformity with the arm's length price so determined by the TPO. This means that the determination of the arm's length price, wherever the reference is made to TPO, is done by the TPO under section 92CA3, but the computation of the total income having regard to the arm's length price so determined by the TPO and is required to be done at the assessing officer is still there. What the court finding is that what the court is saying, it is therefore quite clear that the process of determination of the arm's length price is to be carried out during the course of assessment proceeding. So the arm's length price has to be carried out during the assessment proceeding, maybe under subsection 3 of the 92C, and where the assessing officer determine the arm's length price, or under section 1 to 3 of the 92, where the assessing officer refer the determination of the arm's length price to the TPO. We are on the para number 9. Para 9. We may also refer to the provision of 143.3 of the Act dealing with the assessment of the income. In terms of the 143.2, 143.3 subclause 2 of the Act, it is prescribed that the AO shall, by an order in writing, make the assessment of the total income or loss of the assessee and to determine the sum payable by him or refund to any amount due to him on the basis of the assessment. It is only in the course of such assessment total income of the assessing total income that the AO is obligated to compute of the income arising from the international transaction of an assessee with the associated deposit having regard to the arm's length price. Now, what they have happening is that since there was no assessment was pending, there was no occasion for the purpose of reference to the TPO, and therefore the order of the TPO was totally invalid. And based on that order, the notice under 148 was totally also invalid here. This is the para number 10, what talks about this. Para number 10 and 11 here. Very much important to understand the concept of the 92CA. The occasion which required the AO to compute the income from international transaction arises only during the assessment proceeding, wherein he is determining the total income of the assessee. The Central Board of Direct Taxes, in instrument number 3 of the dated May 28th this one said, has also stated that in case it is selected for the scrutiny assessment before the assessing officer may prefer to compute the arm's length price in relation to the international transactions to be the TPO under section 92C of that. The relevant portion of the instruction number is as below. Paragraph number 11. The court operative para. Therefore, we are inclined to uphold the proposition made by Pardiwala that the assessing officer can make reference to the TPO under section 92CA of that only after selecting the case for the scrutiny assessment. The instruction of the CBDT is also a pointer to the legislative import that the reference to the TPO for determining of the arm's length price in relation to the international transaction is envisaged only in the course of assessment proceedings, which is the only process known to the Act whereby the assessment of the total income is done. Therefore, in our view, the tribunal was correct to hold that when references are made to the TPO by the assessing officer for determination of the arm's length price in relation to an international transaction, no assessment proceeding were pending, and hence it was an invalid reference. Consequently, subsequent order passed by the TPO and any on the invalid reference is bad in law, and therefore it has passed that. Come to the next judgment, 455 ITR 583. This is the judgment from the Patna High Court, where the issue was there whether the section 45(5)(a), which was inserted from the 1st of April 2018, whether it can be treated as a retrospective or it has to be a prospective only. Because if you go to the memorandum of the 45(5)(a), it is the prospective here. It is not a retrospective here. The argument of the SSC was that it should have a retrospective effect because it was for the purpose of avoiding any confusion in terms of the application, in terms of the income that is arising to the appellate SSC due to the JDA, Joint Development Agreement here. Let's see what is there and how the court has dealt into this part here. First part is that whether the 945(5)(a) can be qua the individual and HUF only, or it should be encompass the other type of SSC also. The second issue is that whether it can have a retrospective effect. The two issues which the court is dealing here. So court is in before the court, the 45(5)(a) was challenged, the virus of the 45(5)(a) was challenged, and the court is dealing into that part here. Paragraph number 7. Be that as it may be, we are called upon to answer the question regarding the retrospectively claimed by an amended brought into the Finance Act, into the income tax by the Finance Act 2017, which has inserted the subsection 5A under section 45 after subsection 5, the explanation here, which was specifically stated to be inserted after the with effect from 1st of April 2018, making the amendment prospective in operation. So the first question is that whether the 45(5)(a) is retrospective or prospective. On this issue of the retrospective and prospectivity, there is a various Judgment has been quoted here. First judgment is on the case of the Godrej Boys. Godrej Boys was in the High Court of Bombay. That how to understand the term 1450. The second judgment was again from the Godrej Boys, which was quoted here. The third case was from the Allied Motors, which was also quoted here. So come to the para number 13. Para number 13. So what the court is concerned, we are concerned with the specific question as to whether the bringing of section 45(5)(a) legislature was trying to eliminate an unintended consequences visiting the SSC with a hardship which was sought to be removed, thus making it a curative and hence retrospective. So the first argument is that it should be treated as a curative, and if it is curative, then it should be treated as retrospective. Because the amendment, according to the department, as per section 247(5), any transaction involving transfer of possession of immovable property in respect of preference of a contract of the transfer of the capital asset and any profit and gains arising from such transfer and capital asset are chargeable to the income tax under the head capital gains and to be income of the previous year in which such computation. So after that, the computation has been discussed. The petitioner, para number 15. The petitioner contains an essentially is that the section 45(1) read with section 247(5) of the income tax act enable inclusion of the capital gain in the total income of the SSC of the previous year in which the possession of the immovable property has been handed over by the owner to the developer as envisaged under section 53(a) of ITR under a joint development agreement. Then such income accruing from the joint development agreement is deemed to be the income of the owner of the property accrued the SSC in which the transfer respectively. In the case of Balbir Singh Mani and the Sarasai Steel, we know that the term transfer was discussed under that part here. Paragraph number 17. By the Finance Act 2017, 5A was inserted under subsection 5 of the 45 with expansion thereto. As per subsection 5A, with respect to capital gain arising to an SSC who is an individual and an HUF family from the transfer of a capital asset being land or building or both under the specified agreement shall be chargeable to income tax as per the previous year in which the certificate of completion for the whole or part of the certificate is issued by the competent authority. The discrimination alleged in the petitioner in the batch of petition is that the SSC entering into joint development agreement are discrimination only in relation to their legal status, means individual and HUF family members. HUF given the credit which is denied by others, like this one here. The date of amendment does not offer the intelligible difference here in discriminating between the similarity situated SSC who have entered into the joint development agreement. After that, there is an argument here, para number 19, where the court is coming into the view. Yes. Court say that we are not agreeable to the continuance of the said argument, especially since the amendment in section 45 by insertion instruction was expressly stated that it will be effective from the 1st April 2018. So it was expressly mentioned that it is a prospective here. there is no question of any discrimination between the person who entered into the JDA before and after the amendment, insofar as the JDA agreement entered into by the individual and HUF is concerned prior to 1st April 2018, being governed by the law on this subject as it existed at the point of time on the co-joint reading of section 247(5), read with section 45(8). There is no discrimination. Further, it says that there is no discrimination among the differentiation is made on the basis of date on which the joint development agreement has been entered into, which is a natural consequence of any amendment brought to the Act by way of insertion, especially a prospective from the specified date. Further, though there is a different class of SSE under the, they cannot be considered to be equal merely by reason of their being assessed under this. So they are not to be equal. There is an intelligible difference here is there. After that, the Godrej voice is there. The court has discussed about the various court. Para number 22 is important. Let's go to the 22. The power of legislature to make an amendment with retrospective effect is undisputed. But the requirement is that unless the same is expressed in that clear language is implied without any scope of doubt, then the amendment would not only prospective, would only be prospective here. An amendment can be taken as implied retrospective only when it is intended to remove an obvious anomaly or correcting the latent error or obliterating the absurdity or bringing in consonance with any other law for the any other law of the Constitution. In fact, in such cases, the legislature brings in the amendment by way of substitutions and yes, and even when the provision is substituted, it would be retrospective only if so expressed or follow from the necessary intendment as is implicitly from the language implied. In the present case, the amendment was effective from 1st of April 2018, as expressly stated to be prospective. So it was mainly effective prospective from the date, and there was no intendment fretted out of which the above noted deficiency are totally absent. We find no discrimination having been rated by an individual or HUF for whom there was a change made in the manner and the previous year in which the computation of the total income was made, which was effective only so far as the agreement dated 1st April 2018. So after that, the court quotes the Chile Singh cases, and based on the Chile Singh cases, the court has found that this clause is non-discriminatory, and also it is not a case of the it is also not the case of the retrospective application, but it is a prospective application. With this, we have covered 4 judgments here. I have some urgent issue which is pending before me, so I will not able to continue anymore right now. This judgment, or the remaining judgment, will be covered will be covered on our next day of discussion, that is the next Wednesday. I hope that I understand there is an inconvenience to all, but we will be covering this balance of the judgment of the 455 part 4 in our next day of the discussion here, because of the some expediencies which I have to attend right now. Thank you. Pardon me for any inconvenience here.